Good day and welcome to our next webinar, ILS Evolution, a regulatory perspective on innovation in the reinsurance market in Bermuda. As the headline suggests, this webinar seeks to explore the Bermuda Monetary Authority's perspective on the manner the ILS market has evolved to become a significant source of capital and capacity for the insurance market and the consequent impact on policyholders. The authority has fostered growth and innovation in this market over more than 20 years. This has been achieved by working closely and balancing the views of underwriters, policyholders, capital providers, and service providers to build a robust, progressive framework of oversight and supervisory practices that are compliant with the ILS market. This approach has been characterized by partnership and pragmatism. It focuses on protecting the interests of policyholders without stifling innovation and market growth. This has allowed the ILS market to grow to be over 90 billion of capital. The vast majority of that capital falls in Bermuda and under the BMA's jurisdiction. The capacity provided by this market continues to benefit policyholders and facilitate insurance market access. The authority continues to focus on policyholder protection and keep pace with evolving international regulatory standards against the backdrop of fairly significant macroeconomic events, as well as various other socio-political headwinds. It is important to note that this market and the regulatory framework and the industry ecosystem has been tested by various insurance and financial crises since the year 2001. It is fair to say that the market has prevailed in all of these crises and continues to be a significant part of the insurance market in Bermuda. Today, we will cover what has helped Bermuda succeed in the past and discuss some of the keystones of our regulatory framework that focuses on the ILS market. We will talk through how the industry has managed to change and the challenges in the future, including the uncertainty related to COVID-19 pandemic, the loss creep from recent cat events, and climate change. Today's webinar will be moderated by an industry veteran, Mr. Aditya Dutt. Aditya is a good friend of mine, and he's currently serving his garden leave from Renaissance Re Holdings before joining ILS Capital Limited as a partner, president, and member of ILS Capital's board. Aditya's role at Renaissance Re was that of a senior vice president and president of Renaissance Underwriting Managers Limited. Aditya led Renaissance Re's ILS and third capital management businesses, as well as managing Renaissance Re's portfolio of strategic investments. Aditya will be joined by two subject matter experts at the BMA, Martin Maringi and Tejan Talbot. Martin is an assistant director and Tejan is a principal in the authority's insurance supervision department. Both Martin and Tejan have been passionately focused on the ILS market for the past 5 years and have been the face of the authority to the market. I will now hand it over to Aditya to take us through the rest of the discussion this afternoon.
Much, Gerald, for that wonderful introduction. I'm delighted to be here with you, with Martin and Tejan, and to talk about how our industry, the ILS industry, has evolved. I've had the pleasure of working at a regulated company and with all of you for the last 12 years here in Bermuda. But I'm looking forward to learning more through this discussion. I guess we'll start off first, Martin, maybe with you, but briefly, if you could revisit the history of the ILS industry in Bermuda. Why do you think it has grown the way that it has since 2001, as Gerald mentioned? And if you could tie for us the regulatory framework and how that has catalyzed the development of the industry at critical junctures.
Thank you, Aditya. And it's good to have you and Tejan on the panel. So for the sake of our audience, I would like to look back over the last 20 years. And with this, looking at that period, we see first how the industry, the reinsurance industry in Bermuda has evolved and grown through that period. And to begin with, I'll start with the class of the 2001 startups that were formed following the 9/11 terrorist attacks. And then we jump forward from that point to the class of 2005 that came following the disruptions that were associated with hurricanes Katrina, Wilma, and Rita. The ILS capital came in place or started at least exerting significant influence in our market post the global financial crisis in 2008. And this was in part due to the attractiveness of the ILS asset class in terms of the diversification benefit that it offers. So since then, what we have seen, and rolling forward now more closely to where we are in 2020, the story is the same. Capital is continuing to flow into the Bermuda market. That includes the ILS market. And I guess back to your question, Aditya, in terms of what type of the characteristics of our regulatory framework that have facilitated the startups that you have seen, the growth, the development, be it of the traditional business and that of the ILS itself. The story remains the same, and Gerard alluded to it earlier on. The primary focus of our Bermuda ILS framework continues to be finding solutions that work for the market in terms of robust policyholder protection, as well as cultivating an environment where investors can innovate, market participants can grow, capital structures can become more innovative, products can become more creative, and so on and so forth. So in terms of response to your question, it's that balance between policyholder protection and fostering and cultivating an environment where investors can be innovative in product and in terms of their capital, and they can continue to grow.
I think that's the evidence certainly supports the statements you've just made, Martin. Tejan, I guess if we drill a little bit deeper on some of the points Martin just made, but in your view, what have been some of the areas of improvement from a policyholder standpoint? Recently we've seen some new regulation around collateralized CI, for example. But walk us through some of the major improvements over the past any number of years that have helped how policyholders are protected in the ILS framework.
Yes, thank you, Aditya. Further to Martin's comments, I think a core piece of the elements that have aided in the success of the ILS product and protecting policyholders in Bermuda has been the emphasis on sophisticated participants. And sophisticated participants have been a significant pillar because they've helped the maturity of the market and the growth of the market. And we've seen this materialize in a number of ways. And I think, if I bring two examples off the top of my head, the first one would be the robust due diligence that sophisticated participants bring. They know exactly what they're getting into when they're engaging in the product. I think another and probably even more important manner that sophisticated participants bring to the ILS market is the strategy behind entering the market. The days of the one-off deal have sort of become moot because now as these sophisticated parties enter the ILS market, they're coming with a strategy which is more long-term and sort of bringing some permanency into the market. In addition to sophisticated participants, we've had a keen interest on collateral, and typically what we see is collateral placed in trust and to the benefit of the cedents, the policyholders. and it's them who control the funds as far as releasing it and the ability to draw down on it. And what we find is that these sorts of mechanisms lead to reduced credit risk, for example. The funds are readily available at the control of the cedents, and also timeliness of payment. So the ability to draw down instantly when triggered, is a keen characteristic that the market values highly. And then there's other associated elements such as, the trust arrangement, the contracts. These are all legally binding documents that hold each party to legal requirements to ensure that they engage in the most prudent and pragmatic business here in Bermuda. So I would say those elements are the core at what we've seen, what we've emphasized on over the years that has allowed the market to grow and continue to mature.
Yeah, it's all great points, Tejan. Certainly, over the last couple of years, we've seen some tests of the mechanics that you've mentioned, and policyholders have walked away with fair claims payment in general. I guess sticking with part of that theme, but from your perspective, and I think we all read the trade press, and there's a lot of activity post-COVID of startups and ILS funds and various types of vehicles. Give us your perspective on what you see in terms of new activity, post-COVID startup activity. Help us understand from your vantage point what you're seeing in the market and how you're working with some of those companies.
Yes. So as you've mentioned, there's been a great deal of activity post-COVID, and we've certainly witnessed that here in Bermuda. When we look at the statistics, so as of November 2020, we had 58 new registrants on our registry, which compared to the prior year is 58. There were 58 registrants for the total year. So there's potential for that number to surpass last year's with the last month of registrations that may go on. So as far as activity post-COVID, it's been pretty good, very active. And of course, even with remote working environments, the authority has been able to be resilient and respond to this environment, which has led to, the success of the new registrants that we've seen in the market. If we dive into the numbers a bit, I think, so ILS, new ILS registrants, insurers, so special purpose insurers, collateralized insurers, and the incorporated segregated account sales. Between those frameworks, they represent 49% of new registrants. So of all the 58 registrants, 49% have been ILS specifically. So that's ILS capital coming into the Bermuda market. The captive space, long-term and small commercial space, they each represented 16% of new registrants. So they're maintaining their significance to the market as well. So I think that data alone underscores sort of the significance of ILS to the local market, and Bermuda being a significant market or jurisdiction in reinsurance underscores that ILS is synonymously significant in the total reinsurance landscape. If we dive sort of a bit deep into what have been the drivers behind some of these new formations, I think, as we alluded to earlier, the resilience of the authority, being able to be open, being able to accommodate new applications as they come in, this is probably the first instance. We note in ILS, cat bonds have had a tremendous year, I believe a record year. So a lot of those new formations have been due to cat bond activity. Some of them being new capital coming to the market, and we've seen instances of capital that's previously been in the market and now returning to the market. So those are good signs for the cat bond market specifically. In addition to cat bonds, we've seen a number of mortgage bond deals being placed. Around 2016-17 is when mortgage deals started to emerge and continuously grow. So in 2020, we saw continued growth from that segment. and mortgage bonds seem to be, setting up as a supplemental element to the mortgage market. So that's good to see. I think specifically the SBI regime, its ability to be prudent, pragmatic, but also responsive and provide that speed to market. In a COVID operating environment, I think that specific class in itself and it being well known amongst ILS participants aided in the ability to set up and play out sort of ILS strategies. And I think lastly, there's been new platforms that have started up. Many have been much publicly publicized. So we've seen new participants come into the market, new platforms, new players. So I think that's just a good sign for ILS overall.
Yep. Martin, what's your perspective on some of that? And do you think there are specific initiatives that have helped the industry grow of late? And then, maybe you can both address how any of those initiatives might specifically have offered flexibility to new startups and new funds or incumbent funds.
Thank you, Aditya. So maybe one of the examples we could highlight that we have been working on over the last year or so was the introduction of the collateralized insurer class. The key thing, and I think what Tejan is highlighting here, is that Bermuda has the appetite to adapt our regulatory regime to align with industry development. This is the core. This is core to our supervisory culture. It's core to our strategy. It's core to how we do things. We are not being left behind by the industry. We are moving along with the industry, and this is in response to that. We have evolved with the industry. At the core of this, Aditya, the basic principle remains the same as far as our focus is concerned. Robust policyholder protection while addressing industry need for a framework that does not stifle innovation. In this regard, we looked at what the licensing infrastructure that we had, and the core ILS product that we had was the special purpose insurer framework. That framework, the special purpose insurer class, was established 10 years ago, more than 10 years ago. And back then, a majority of the transactions that were in the market and the structures were relatively simple, and in a lot of cases, limited duration catastrophe bonds. Fast forward to where we are now, where we see, in actual sense, a majority of the capital is not deployed in catastrophe bonds. Most of it is actually in other structures such as collateralized insurer, sidecars, and other structures. So in response to this, what we did as the BMA is we took stock of where we are, and to try and address the needs of the market as they evolved, we responded with the creation of the collateralized insurer class. And this class is designed to, number one, be complementary to the existing special purpose insurer class. That's in terms of sitting alongside, but not replacing. And we envision that a majority of the ILS deals will perhaps continue to be transacted through the SBI class. So as a point of clarification here, the collateralized insurer class is to deal with the more complex peripheral transactions, but we expect and we envision that a majority of the existing deals will continue to fit within the existing special purpose insurer class. But just to name and to list some of the examples of flexibilities and regulatory flexibilities that the collateralized insurer class offers relative, for instance, to the special purpose insurer class is, number one, outward reinsurance. So collateralized insurers have the flexibility to fund a portion of their collateral using outward reinsurance. The second flexibility that is found in the collateralized insurer class is in terms of the nature of the cedant that this class can trade with. So the capital that's in the collateralized insurer class could face unsophisticated counterparties, and in a lot of cases, unrated cedants. When you jump into the SBI class, we have limited that in the past to cedants that are rated. The other element and the additional flexibility to highlight here is in terms of investment risk. Traditionally, SBI class has been associated with low investment risk. The collateralized insurer class offers that flexibility to take on more investment risk than we have seen in the associated with the SBI class. And the last thing is the flexibility for the collateralized insurer class to engage on a direct or a primary insurance basis as opposed to reinsurance. The SBI class deals with reinsurers. The collateralized insurer class has the ability to deal with on a direct basis with primary policyholders. So Aditya, again, this is the collateralized insurer class is a development that has resulted out of our interactions with the market, out of our desire to provide solutions to an evolving ILS market. And some of these features that we have built into the collateralized insurer class reflects that appetite of the ILS market itself.
Yeah, I agree. It's the technology that you've built in here is certainly responsive to a lot of the changes that have occurred between reinsurers and cedants over the years, and a lot of the points you raised are very responsive. I guess no discussion these days is complete without talking about COVID-19 and the impact of COVID-19. I'm curious. We've all been affected by COVID and the pandemic in our own personal and professional lives. It would be great to hear from you. How has the BMA responded to COVID-19, sort of part one, and then part two? How do you think the companies that you oversee and that are in our jurisdiction here in Bermuda help us understand how are they responding? What are some of the things you're working on to respond to the pandemic? How has it affected companies in our jurisdiction?
Thank you, Aditya. So maybe I could start with how the BMA has responded, and to begin with what we did early on when COVID came up was we activated our business continuity plans. And this is essentially to prevent disruptions to our operations and ability to service the industry. One of the other aspects that we put as a priority internally as part of our response to this is truly responsiveness to market and ensuring that the key projects that we were undertaking were not in jeopardy, were not disrupted as a result of COVID-19. Just to provide some examples here, we rolled out the updates to the SBI guidance note and implemented essentially the collateralized insurer capital and filing frameworks in June. This was in the midst of the COVID situation. So in a nutshell, we have continued with our BMA operations as largely as usual. The one in terms of potential concrete steps that we took, Aditya, is number one, we looked at the existing internal data that we have, and we have the benefit of having collected in prior years and as part of the regular filing with the BMA, information that can help us identify the most vulnerable companies or companies that would be impacted. This is especially with regard to their investment portfolios, areas that are more financial in nature, like for instance, solvency and liquidity. But as you can imagine, Aditya, the nature of COVID-19 was quite complicated. And one of the impacts it had was also not just on the investments and liquidity and solvency and so on and so forth, not just financial, but also that financial impact was also coming from the underwriting front. So to try and gather some insights in terms of what was going on as far as the underwriting is concerned, we conducted a survey that was essentially focused on understanding the underwriting impact that COVID-19 was having on Bermuda balance sheets and Bermuda insurers. Just to highlight one of the key themes coming out of that survey is that business interruption and event cancellation continue to be the key drivers behind a significant portion of the insurance losses that we are seeing in that area. Indeed, they represent approximately 60% of the insurance losses that we have seen so far. One of the other outcomes of this is that the survey showing us is the complexity of COVID-19. It's very clear to us, and the survey has shown us that there has been very limited amount of claims that have actually been reported, and that's just due to the nature of this event and the complexity of the event. So Aditya, back to your question in terms of how we have responded to COVID-19. So it's surveys, it's reorganizing our operations to ensure we are prioritizing the key areas that are of critical importance to the ongoing function of the market. One of those has actually been the opportunities presented by COVID-19 in terms of potential for new startups. So what have we done here? We have reorganized our resources to ensure we continue to facilitate quick deployment of capital via an efficient and an uninterrupted registration process. So in summary, and perhaps to connect COVID-19 to the ILS sector, we are of the view that COVID-19 presents a unique challenge to the ILS sector. And this is partly because of the complexity of the event itself, but also in connection with the fact that some of the ILS investors may not have anticipated that they could incur losses from a pandemic. It's also important to take into account that COVID-19 came in the backdrop of some important topical risks in the industry. And these include trapped collateral associated with the 2017-19 events. And the effect of this is that it had some impact on the amount of capital that's available for the 2021 renewal. The other context that COVID-19 needs to be looked at within the context of ILS sector is a loss creep. These are the two sort of key risks that preceded the COVID-19 having a bearing on the ILS sector. So in summary, Aditya, we go back to I guess what's consistent with the industry observations. What we are seeing is that COVID-19 continues to present considerable uncertainty for the ILS asset class. Having said that, the asset class itself has demonstrated resilience, primarily due to the sophisticated nature of the ILS investors and the capital providers in the space. We see evidence that the market is continuing to respond well. And in fact, majority of the focus is on optimizing the asset class by improving returns, looking at the terms and conditions. The capital providers or the ILS investors are not pausing or stopping to engage with the asset class. If anything, they're looking to optimize it further as a result of the opportunities presented by COVID-19.
Yeah. More than anything, on the contract side that the authority has been involved in, as we approach a big renewal period in January, in terms of contract certainty, terms and conditions, anything that sticks out in your mind that might be a consequence of COVID-19 or related to?
Yes, certainly. A couple of things. And this is perhaps one of the important topics and one of the key messages that we would like the industry to be aware of. From our point of view, we see two types of contracts, or two types of instruments, so to speak, that govern the ILS market. The first one are catastrophe bonds, and these are often characterized by capital market securitization standards. The second category are the collateralized reinsurance arrangement and documentations. From our experience, from what we have observed, both of these categories of contracts have responded well and as intended in the past. Having said that, we continue to see room for improvement, especially in relation to the latter class, that's the collateralized reinsurance class. And some of the elements or areas that we think would benefit in terms of improvement would be ensuring that these reinsurance agreements, they capture the nuances of the ILS product. For example, it could be, for instance, outlining and specifying how the ILS contract will respond if collateral is not posted in time, if specifying whether or not there's a clawback in the collateral, stating or speaking, the contract speaking as to matters relating to top up in the event of impairment of assets, rollover of collateral, roll forward of collateral, what's the language with regard to commutation, and so on and so forth. So there are opportunities at DTIA for improvement as far as collateralized insurance contracts are concerned. Let me just speak briefly with regard to some of the positive developments that we have seen associated with the contract wording in light of COVID-19. One of the positive things is it's now becoming market practice to specifically exclude COVID-19 or have clear contractual language that governs COVID-19 and specifies how the contract will respond to COVID-19. We believe that this is particularly important given the complexity that we have seen with the business interruption claims.
Absolutely. It's always good to hear, a regulator being able to speak so fluently about business issues that the industry is facing, like trapped collateral and rollover and some of the topics you mentioned. So it's very comforting to hear that. I guess shifting gears a little bit, Martin, if talk to us when you're looking at a lot of new company formations, fund formations. When you interact with management teams that want to set up in Bermuda, what do you tell them about the regulatory framework here? What are some of the advantages of Bermuda versus some other jurisdictions? What do you tell new managements about coming to the island and establishing their businesses here?
I guess the first thing we could point them to, we discuss with them is our track record, Bermuda's track record in the ILS space, and with this, statistics speak the loudest. Bermuda's share of alternative capital is currently above 70%. We have a well-respected regulatory framework, and more importantly, and I think this is important for the capital providers as well, is that the framework that we have in place is not a generic framework for a typical insurance company. It's a tailored framework that caters to the unique needs of ILS capital as well as the policyholders. I guess also to point to the experience we have had, and this is important in terms of some of the challenges the ILS sector has experienced. We have grown with the sector, we have experienced them with the sector, we have been having discussions with market participants, industry practitioners, and have had the benefit of this experience as the market evolved and as the market went through these experiences. Key among these were, for instance, the stress periods, for instance, through I guess, back-to-back losses of 2017, 2018 losses. We have also been working with the industry as the business model in the ILS sector have evolved in terms of product, in terms of the structures, in terms of how they're accessing the market, in terms of distributions. So a number of areas that we have had the benefit of. And finally, the world is talking a lot now about data, and data is king. We have a lot of data in the space. We have visibility over the contracts in the market. We have visibility over the deals that are going on in the market, and we have had this for over the last 10 years. I guess the benefit of this is that as we come up with regulatory frameworks, as we come up with regulatory solutions, we are not guessing. This is data-driven decision-making at its best. And we have the benefit of this in-house data in vast amounts that we can look at and facilitate decisions that are appropriate for the market.
That's great. Thank you, Martin. Tejan, what's next in 2021? Talk about some of the things that the authority is working on. What can we expect to see? What can you preview for us on some of the important initiatives you're working on for the future?
Yeah. So I think coming off the back of some major wholesale changes with new filing requirements, new class, new guidance, on the back of that, I think there's a bit of work that has to be done to sort of reinforce and ensure that the key message and standards the authority is trying to push is received, and particularly with a lot of that coming in effect during a pandemic, which might have been a bit of a distraction. So before any other wholesale changes, I think focusing on those changes and ensuring the market receives the intentions of the authority with regards to those changes and what they mean and how they're meant to ensure the market remains prudent, but also recognizing the evolution and evolvement of the market. And I guess on that note, another sort of keen initiative would be for the authority to be clear in its message. The SPI regime, for example, the collateralized insurer regime, ISAC regime, and how they all supplement each other, in order to accommodate the wide scope of ILS business models, not necessarily sort of favoring one or the other, but just highlighting that these can accommodate a wide scope. So to the extent that there's various models out there, we have a framework that can facilitate those models. So I think for that point, it's more of a messaging and ensuring that we're all reading from the same hymn book, for lack of better words. So that's going to look like continuous education on the framework, possibly in platforms like we have today, possibly further documentation. So just ensuring that the message is there, the message is clear, and that we're all on an equal understanding. As far as the space itself, and from the regulatory standpoint, we certainly see room for efficiencies. This is a convergence product. So the authority is going to take stock of our framework and what we're doing and how we can sort of create efficiencies. This is a very efficient, nimble market. So I think it's prudent that the regulation around this also be synonymous with the characteristics of the market. So that'll be the next step. What exactly that looks like, there's many ideas that are very much in the early stages. For example, an ILS fund that's in Bermuda and also has an insurance vehicle. How can we sort of make that regulatory environment as seamless as possible, provided that, we oversee both entities, for example. Another space we're looking at is utilizing our experience. So we have grave experience in, particularly, for example, cat bonds. They've been around for quite a while now. They look more like the vanilla product, given the involvement. So what can we do in the space of cat bonds? One idea that's definitely in the early stages is sort of how do we leverage technology? How do we leverage our experience and maybe we can facilitate some form of an efficient registration process for cat bonds, you know. So there's some examples of, you know, efficiencies and how the authority is going to take stock of where we are and how we can improve the regulatory environment around that. And of course, always maintaining prudency, but ensuring there's a pragmatic approach and an efficient approach that ultimately, from a resource standpoint, for example, can be a benefit to the authority and to the market. A more seamless sort of entry and exit into the market is always beneficial to the players. In addition to efficiency, I think we as the authority recognize that our ILS market is heavily sort of targeted at P&C or non-life business. And we recognize that there's potential for us to sort of ensure that our framework is appropriate so that we can take on life business. There is a segment of life business out there, and given the ecosystem in Bermuda, the reputation of the regulatory environment, we see no reason why life business, ILS business, could not be facilitated here in Bermuda. So there may be some adjustments needed or subsections of the market created to specifically accommodate that business. So that's something that we'll be keenly focused on in 2021. So much of those items are in their early phases, ideas at the moment, but the authorities never been known to sit too long on an idea. So I think there can be some expectations of further movement in the market, I would say.
That's great. Thank you, Tejan. It sounds like you've got a busy year ahead from some of your comments. You know, staying with the theme of looking forward, you know, on my side of the fence, on the market side, we hear a lot from investors about you know, big picture themes, and frankly, not just related to the insurance and ILS space, but these are affecting broad financial markets generally. But themes like climate change, climate risk, ESG, reporting. You know, very quickly, I'd love to get both your reactions on, you know, how does the authority think about those issues? You know, are they front and center for you? Are you you know, how are you thinking about them?
Thank you, Aditya. So just to start with, this is a wider topic, and it cuts across the entire reinsurance and insurance sector. It's not just specific to ILS. One of the points that we noted earlier on is that the world is changing, and in light of this, it's important that in this changing world, organizations, including in the ILS sector, including elsewhere, they act responsibly and focus on sustainability. Like any other business, in order for the ILS ecosystem to thrive and to be sustainable, the authority believes that it's important to embed ESG in their strategies. Climate change is a significant factor for to sustainability and the business structures. One only needs to look at the impact of the storms and wildfires to really start paying attention to this. As far as the authority is concerned, we will continue to pay special attention to the ESG in general and this whole topic in general. For instance, and to get us off, this year in 2020, we conducted a climate change industry survey, and this survey covered both our ILS market as well as our commercial insurer. The key driver behind the survey was to understand how the industry, the Bermuda insurance industry, is dealing with and is responding to this topic itself, the whole topic of climate change and the risk associated with that. So having solicited information on this, one of the key steps we'll be taking is to share and provide that feedback to the market in terms of the results of that survey. But more concretely, as we look forward to 2021, we are looking to make further plans to run stress tests that are aimed at assessing the industry's exposure and vulnerability to ESG and climate change risks. Based on that information that we'll gather from the stress test that we'll be implementing, as well as the survey, these will drive our ESG supervisory strategy. In essence, we are keen to see that companies embed ESG and in particular climate change in their own risk assessment and governance frameworks.
That's great to hear. I think it's, as I said, top of mind for investors, for managers, reinsurers, cedents. So that's great to hear that it's top of mind for you as well. I guess we'll wrap up with one last question, and I'd love to hear both of your takes on 30 seconds or less, but how do you envision continuing to work hand in hand with the industry? How does Bermuda stay on top of the ILS ecosystem as a regulator? What are some of your thoughts on that? Parting thoughts. Tejan, let's start with you.
Yeah, 30 seconds, a challenge, big question, but here goes. So I think first we have to take a stock of what we have and what's worked well. It doesn't make sense getting rid of what's been good, but that does leave opportunity to further improve them, to ensure that the market, the framework, the regulatory environment remains robust. I think in addition to sort of the day-to-day regulation, post checks, keeping in touch sort of with the market, therefore keeping abreast of, the developments that are happening in the market and trying as much as possible to have a proactive framework is another good way for the authority to continue in its efforts. I think sort of technology and where we can implement these platforms to create efficiency and transparency in the market would be another good way. And I think the ILS market itself is looking at those elements to improve. And I guess lastly, I would say the regulatory environment has to be synonymous to ILS. ILS is nimble, it's flexible. So I think from a regulatory standpoint, we sort of have to take a solutions-based and tailored approach to regulation as to how we address these products in a prudent and pragmatic manner that can be robust and beneficial to the market and the regulatory environment.
Yes, maybe if I could also add to what Tejan has said, I think it's all about balance. Balance is going to continue to be key. And we have two sides here. We have policyholders on one side, and we have the providers of capital, ILS capital on the other side. With regard to policyholders, I think we have a clear sight of what's needed there in terms of policyholder protection, how that looks like in an ILS environment, the types of contractual language and the documentation that should govern policyholder protection. So that's one side of that. The other side to this is the industry needs in terms of a regulatory framework that does not stifle innovation. We just to echo what Tejan has said, some of the demands we have seen, or the needs of the ILS industry, is that it's quite sensitive to the regulatory burden and the costs associated with the regulation. It requires us to be responsive. It wants to move capital very, very quickly as opportunities arise. So the key question, Aditya, is for us as we go back, is to ensure we keep these sides of this hybrid product in mind as we engage with the ILS sector at large. And provided, I think, if we do that, we are going to continue to see a robust ILS market that's addressing those two needs as far as the market is concerned.
That's great. Well, Gerald, Martin, and Tejan, I want to thank you, gentlemen, for a fantastic discussion. I learned a lot. I hope our listeners will feel the same. I'll add in my 2 cents. Just sitting across the table in your office many times with various vehicles. Some of the comments that were made today, you really get the sense that compared to a lot of other different jurisdictions, that for ILS specifically, the BMA has taken a very tailored approach to things. It's not a cookie cutter, it's not a one size fits all, but you've really been sensitive to the business issues that cedents, policyholders, managers are facing. And I think just proof in this discussion alone, your facility with a lot of the issues that are really detailed, granular, and your ability to incorporate those into policy and regulation has always, I think, been helpful to the industry, and a big part of the reason why ILS capital continues to find a home in Bermuda. But I'd like to thank you guys. It's been a great discussion. I hope you and your families stay safe and healthy. Have a wonderful holiday. And with that, I'll pass it back to Gerald for some closing thoughts.
Thank you very much, Aditya. I really enjoyed the conversation. Even as an insider, there's always a lot to learn when you have subject matter experts and great minds like the three of you seated together having a conversation. So I really enjoyed that. 2020 has obviously been a tough year, for the world, and it's reminded us how uncertain the world is. The Bermuda and the BMA continues to be adaptable. That is the one thing that we are good at. The conversation today has demonstrated some of that adaptability and some of what we are doing to assist the market. I think the one thing I would like to add is with COVID-19, we've seen an acceleration of digitization of information. Martin mentioned something to do with data, and John referred to efficiencies. One of the things that the authority is going to be doing going forward is to increase our adoption of technology and technological applications to make processes and systems more conducive to the digital world. What this is likely to do is to lead to more automation of the processes and using of more of automation tools, which is likely to lower the cost of regulation and compliance, which is always something that the market cares about. We are strong believers in that innovation, not for innovation's sake, but innovation for the purposes of the users, in this case, the policyholders, and an efficient market will benefit the end users. The end users, in this case, are policyholders, not just in Bermuda, but policyholders all over the world that benefit from this important insurance sector. Again, Aditya, thank you very much for moderating this. Tejan and Martin, a great job, and thanks a lot for sharing some of your wisdom. And to everybody, have a Merry Christmas.
Thank you.
Thank you.
Thank you.
Thanks.